What's up, everybody? Welcome to the August 18th, 2025 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is brought to you by IndiWealth. Today, we're just going to talk about the hot button topics in the market. It's a little slow, actually, right now. Not terribly. There's still things that are going on out there, but not quite the level of activity as we end summer and come into fall. So, without any further ado, though, let's get started. Let's start with this: diversification's worked this year. We've got a couple of asset classes, a few of them here that are actually up 20% year to date that are actually outside the S&P 500. The S&P 500 is up about 10%, which again, don't get me wrong, that's a really good year. We're at all-time highs. So it's been a really good market year to date so far. But I just wanted to call out some of the other asset classes that are really performing well. I mean, you've got gold, you've got Bitcoin, and you've got international stocks, all up more than 20% year to date so far this year. That is significant. There's no question about it, especially for international stocks. Now, over a 1 year period, it's been more normalized because they had a little bit of a difficult fall last year. But international stocks on the year, there's not many times where we're sitting in August and talking about 20% plus year to date in international stocks. So, for those that have held international stocks in their portfolio, which at IndiWealth we believe you should have a small component of that for the diversification benefits. Frankly, that diversification hasn't helped you a whole heck of a lot recently. But this year it is a little different, and it's providing a tailwind to portfolios that own them. Turning to the economic front, it's pretty slow this week. There's not a lot going on except for on Friday, Fed Chairman Powell will be discussing just kind of a market up, or just kind of a general update, I should say, and a speech at Jackson Hole, Wyoming. They do this every year. I don't expect a lot of fireworks, to be honest with you. The market is still, I believe it's 80+% probability of a Fed rate cut in September. So it could have some influence on that if he comes out and says, hey, the recent inflation numbers, especially the PPI numbers, the producer inflation numbers, were a little bit elevated. So if he starts throwing a little bit of cold water on September, that could have an influence on the markets. I don't see that as the most likely scenario. I think he'll leave his options very open. Still quite a ways to September. We're not quite there yet. So there's still a couple of data points and a couple of things they'll probably want to look at. So I don't see him pouring cold water on the September Fed rate cut. But I also don't see him shutting it off either. I think he'll just kind of play the middle a little bit. That's why I think fireworks are relatively unlikely. Turning to the earnings front, the big box retailers report this week: Home Depot, Lowe's, Target, and Walmart. Interesting reports because they're going to tell us what the U.S. consumer kind of looks like. They're going to give us an indication about how much price costs and price increases are affecting spending. Based upon, macro data, macroeconomic data, we have not seen a lot of aggressive cost to the tariffs at this point yet. The inflation front, again, from the CPI side, the consumer price index, was relatively in line to slightly lower than expectations. Still elevated, still above where we probably, or where the Fed especially wants it to be. The producer price index was definitely higher. There's no question about it. But we haven't seen really what the dramatic effect of this having a curbing effect on consumer spending. We're going to see through these reports, and especially their outlooks on what is going on so far in this new quarter, if there's a big change from that case. So that I'll be paying a lot of attention to these for this week, just to try to understand what the state of the U.S. consumer is, because frankly, the state of the U.S. consumer is really the driving force of the state of our economy at this point. Lastly, there's news reports of a bit of a South Dakota Gold Rush 2.0. If you've seen the price of gold, which I talked about earlier, it is significantly higher. It's had a really, really strong rally over the last 18 months or so. Gold prices are very, very high at this point. And so as a result of that, you're seeing some interest in reopening some mines or building new mines in South Dakota. This obviously has pros, people that are look to benefit from that, look to benefit from the gold price. The anti and the negative sentiment comes from the land stewards, the people in South Dakota that know that typically mining companies don't tend to be historically extraordinary stewards of the land. So there is an instance of conflict here. And the worry that I have from this is you build infrastructure on an inflated price, and then the inflated price goes away. Well, that infrastructure damage that you've done doesn't go away, but the mining and the profitability of that and what their willingness to put into the land and the people around the land can. So I would just be cautious. South Dakota, again, I can't control what they do, but understand there are pros and cons to this. And gold can be a very volatile asset class. It does not go up and to the right forever. Could it continue to go up? Sure, absolutely. Could it have a 20% correction in the next few months? Sure, absolutely. You have to understand that gold is a pretty volatile asset class over longer periods of time. When people are looking to a cheaper dollar or thinking the U.S. economy is in trouble, they do tend to flock to gold. But we're also at all-time highs in the stock market. So I think a lot of this has been what I would call speculative, forced. So when speculation ends and gold prices revert, at some point it will, I just worry about what the infrastructure damage that causes from South Dakota. And you have to converse that with the business opportunity. I get that. I totally understand it. I just want them to be prudent uses of the land there. So without any further ado, that was our weekly update. Tune in next week. And if you like what you're hearing, please like and subscribe. And we'll see you next week. Until then, take care. Thank you.